Used car prices are still elevated from the times post-COVID, when there was a shortage of new cars. Compound on top of that, higher interest rates that have been going up, plus just the inflationary pressures that consumers are facing on other things that they buy every day.
Carmax just dropped a bombshell that has the entire car industry buzzing. They've issued a grim warning that might put the entire U.S. economy on shaky ground. Now, we all know Carmax for its no-haggle pricing and a massive selection of vehicles. Sounds pretty sweet, right? But there's more going on underneath that shiny surface that could affect not just car buyers, but the economy at large. So what's the scoop? What did Carmax do, and how will it impact your next car purchase? Carmax on the brink. Carmax's latest earnings report has dropped a bombshell. There is a staggering increase in loan loss provisions that you simply can't ignore. This isn't your run-of-the-mill financial update. It's a flashing red alert signaling rising auto loan delinquencies that are sending serious shockwaves through the car market. And this isn't just affecting Carmax. It's rippling out into the broader economy, sparking concerns that need to be addressed. So let's unpack the numbers a bit. In their most recent fiscal quarter, Carmax didn't just report a modest change. They disclosed a jaw-dropping $112.6 million set aside for loan losses. Now, that's not exactly pocket change. This astonishing figure marks a significant leap from the $89.8 million they had earmarked just 1 year prior. We are talking about a hefty jump that begs the question, what is behind this sudden hike? Well, part of it includes a $52.2 million increase in their estimates for lifetime losses on existing loans, which alone represents nearly an 11% rise in their earlier expectations. The other significant chunk, around $60.5 million, is earmarked for expected lifetime losses on loans they just originated this very quarter. But to understand what's really going on, let's first talk about the Carmax business model. But before we dive into that, take a moment to like this video and subscribe to our channel. A house of cards? With a unique approach centered around what they call no-haggle pricing, Carmax has completely transformed the automotive retail landscape. This means that when you stroll into one of their showrooms, you can forget about the usual stress of negotiating. Instead, you're looking at fixed prices, so there's absolutely no guesswork or haggling involved. Customers can make their purchases with the peace of mind that they're getting a fair deal every single time. It is all about creating a transparent and straightforward environment that caters to those of us who appreciate simplicity and honesty when making such an important purchase. Now, let's talk about the impressive inventory that Carmax has on offer. This isn't just any run-of-the-mill selection. Carmax scours various locations to ensure they have a diverse range of vehicles ready for every kind of buyer. Whether you are in the market for a compact sedan to navigate city streets, a roomy SUV for family adventures, or a rugged truck built to tackle off-road terrain, Carmax is your one-stop shop. It's like going to a buffet of cars, each option beautifully laid out and just waiting for you to find the perfect fit. This extensive assortment not only gives customers more choices, but also solidifies Carmax's reputation as a go-to destination for used vehicles. And it doesn't stop there. Carmax also offers in-house financing, which means they can take the reins on the financing process. This could possibly streamline your purchasing experience and even provide you with competitive interest rates. However, we also need to consider the flip side of this coin. By managing their own financing, Carmax might inadvertently lead some buyers into higher interest loans, especially those with subprime credit scores. It is a double-edged sword. On one hand, it offers convenience, while on the other, it requires careful navigation to ensure buyers aren't left with high long-term costs that could affect their financial well-being. Despite the impressive facade, Carmax faces some real challenges too. One major hurdle is the dreaded phenomenon known as lot rot. Imagine a car perfectly good but left to the elements for weeks or even months. As time passes, these vehicles may develop mechanical issues and their resale value can plummet. Research indicates that cars at Carmax can average around 60 days on the lot before finding a new owner, which raises red flags about their condition and reliability. Who wants to drive off in a vehicle that's been left to languish? From a financial perspective, lot rot isn't just an inconvenience. It has real implications for Carmax's bottom line. The expenses tied to reconditioning vehicles, repairs, detailing, the works, can add up faster than you think. Each vehicle that sits too long and needs significant work can chip away at profit margins, not to mention ramp up operational costs. Each car that requires extensive attention brings Carmax closer to a costly reality check. Interest rate dilemma. Now let's pivot to another critical aspect of Carmax's business model, interest rates, especially when it comes to subprime borrowers. At first glance, the financing options Carmax offers might look appealing. However, digging deeper reveals that their interest rates often exceed industry averages. For individuals with lower credit scores, this can lead to a cycle of debt that's hard to escape. Let's break this down. Imagine you're excited to take home that shiny vehicle, only to realize later that your monthly payments are stretching your budget to the breaking point due to exorbitant interest. Real-life case studies serve as cautionary tales for customers who fell into debt because of these practices. Picture a buyer who felt a wave of relief when securing a loan with Carmax, only to find themselves grappling with escalating payments that spiral out of control. These stories highlight the risks of relying too much on in-house financing without fully understanding the long-term financial implications. And there's more. Consider the growing regulatory scrutiny aimed at lending practices in the automotive sector. With lawmakers focusing more on consumer protection against predatory lending, Carmax might find themselves under pressure to rethink their financing strategies to ensure compliance. The stakes are rising, and the company may need to adapt or face significant scrutiny from both regulators and the public. Another point of contention among critics is Carmax's vehicle pricing. Many argue that cars from Carmax tend to be overpriced compared to similar options available at other dealerships or through private sales. Take a used sedan, for instance. That same model might be listed at $20,000 at Carmax, while other outlets have it for as low as $18,000. Such discrepancies can alienate budget-conscious consumers on the lookout for value. Market trends signal a cooling used car market as demand dwindles and prices stabilize or decline. The current pricing strategy at Carmax may find itself on shaky ground. If buyers start perceiving vehicles at Carmax as overpriced, it could ultimately lead to a drop in sales volume and heightened inventory levels. Picture inventory gathering dust. This scenario can spell disaster not just for profitability, but also for brand reputation. Carmax's warning shot. The surge in auto loan delinquencies is a critical topic that is increasingly impacting Carmax and, by extension, the automotive market at large. National data is painting a rather worrying picture, highlighting a notable uptick in delinquency rates. This increase is particularly pronounced among subprime borrowers who make up a significant chunk of Carmax's customer base. They're feeling the squeeze more than most. Recent statistics reveal that auto loan delinquencies have skyrocketed by around 30% over the past year alone. This surge doesn't happen in a vacuum either. It closely aligns with rising inflation and mounting interest rates, creating a perfect storm of financial stress. To give you a clear visual of how bleak this scenario is, imagine graphs that chart delinquency rates over time, a jagged line climbing higher and higher. Overlay those graphs with economic indicators like unemployment rates and inflation levels, and it underscores a crucial point. Carmax's business model is intricately tied to broader economic conditions. These visualizations aren't just numbers. They tell a story of interconnectedness that reveals how various external factors are directly influencing consumer behavior and financial stability. It's a striking reminder that what seems like just a corporate issue can have far-reaching implications for all of us. The shrinking profit margin. Now, let's dive deeper into Carmax's financial landscape. The truth is, the company is feeling the heat as its profitability is squeezed from multiple directions. Rising loan loss provisions and declining vehicle sales are leading to a challenging situation. You might think that with higher sales volumes, profits would follow suit, but that's not the case here. Despite selling more vehicles, Carmax is grappling with shrinking profit margins, largely because they're facing escalating costs linked to managing delinquent loans. Here's a closer look at the numbers. The gross profit for retail used vehicles has dipped by 3.7%, while wholesale vehicle gross profit has plummeted even further, down 6.4% compared to the previous year. This isn't just some fluctuation, it hints at pressing challenges within the company's financial structure. As we analyze the cost of goods sold, the reality becomes clear. Carmax has been pushed to allocate more and more resources toward managing bad debts. They're also spending more on reconditioning vehicles returned due to repossession or default. Picture this scenario. You are trying to run a car dealership, but a significant portion of your vehicles are not only unsold, but also costing you money in repairs. As these operational costs continue to grow, they can quickly eat away at the overall profitability Carmax can expect to achieve from its sales operations. So why is all this important? Well, positioning Carmax as a beacon or a leading indicator for broader economic health can provide valuable insights into potential future trends across various sectors. The struggles faced by Carmax, evidenced through that worrying rise in delinquencies and shrinking profit margins, might just be a tip of the iceberg, potentially forecasting similar challenges for other retailers and lenders within the automotive industry and beyond. Imagine the ramifications if inflation continues to rise and consumer confidence starts to erode. Carmax's performance could serve as an early warning signal for economic downturns that might ripple through other sectors dependent on consumer spending. For example, if auto loan defaults rise at an alarming rate, we could quickly find ourselves facing tighter credit markets. These circumstances are likely to compel lenders to reassess their risk profiles and rethink their lending practices across all consumer sectors, not just in automotive, but extending to personal loans, mortgages, and more. The implications of Carmax's situation are profound. Stakeholders and investors alike should closely monitor the company's performance, as it reflects not only its internal challenges, but also broader economic trends that signal trouble ahead across various industries. By exploring these data points and understanding shifts in consumer behavior, we may gain clear insights into the future economic landscape and how it might evolve moving forward. The bottom line? In the end, the rise in auto loan delinquencies and repossessions is serving as a clear bell ringing in our ears about the underlying tension in the economy, as borrowers, especially subprime ones, face rising financial challenges in a world increasingly characterized by inflation and higher interest rates. The impact on companies like Carmax becomes significant. The troubling statistics are more than just a snapshot of a single company's issues. They're a reflection of a shifting economic reality that could have ripples felt throughout the broader automotive sector and beyond. This is more than just numbers on a report. It's about the real stories behind those loans. It is about families worried about making their next payment, and it's about a company trying to adapt to an ever-changing economic environment. The voice of the consumer matters, and how they navigate this landscape will shape the future of not just Carmax, but the entire automotive industry. Repossession crisis. The rising tide of repossession cases at Carmax is largely due to a complex mix of high interest rates and vehicle overpricing that puts financial strain on many buyers. Let's break it down. Carmax has developed financing policies that have begun targeting subprime borrowers more aggressively. This strategy has inevitably led to a troubling surge in defaults, leaving many customers in dire straits. These borrowers often find themselves grappling with interest rates that can soar as high as 25%. That's not just a number, it's a reality check. This trend is alarming, particularly when recent studies by Fitch Ratings highlight a dramatic increase in the number of subprime borrowers now 60 days or more behind on their car payments. To illustrate just how significant these issues are, personal stories from Carmax customers echo a narrative filled with emotional and financial turmoil. One individual shared their experience, detailing how they bought a vehicle from Carmax, feeling hopeful about their new purchase. However, shortly thereafter, they faced mounting financial pressures. Despite their best intentions and efforts to maintain timely payments, life threw challenges their way, leading them to fall behind. Ultimately, they received a repossession notice. The emotional distress stemming from this situation was not just about losing a vehicle. It encompassed the weight of societal stigma and the nagging anxiety of what felt like personal failure. Such heartbreaking stories are becoming alarmingly common, especially in today's digital age, where social media platforms serve as a space for people to congregate and share their experiences. These conversations highlight the sorrowful realities of defaulting on loans, and they outline the precarious journey that often leads to the repossession process. The collective voices of customers are crafting a vivid tapestry of an evolving crisis, and it's one that we must pay attention to. The ripple effects. Let's drill down into the financial fallout from these repossessions for Carmax. The immediate economic impacts are significant and definitely raise eyebrows. Each vehicle that gets repossessed usually incurs a loss somewhere in the ballpark of $3,000 to $5,000 when it ultimately hits the auction block. This loss isn't merely theoretical, it accounts for several hidden costs associated with the repurposing of the vehicle, including towing fees, storage expenses, and the reconditioning necessary before it can be sold again. Now, consider how this progressively worsening situation places Carmax in a tight spot, with an increasing number of vehicles marked by repo stickers filling their lots. The mounting losses can quickly add up. It's not just a hit to the finances in a given month, it's the kind of toll that can significantly affect overall profitability in the long haul. Picture Carmax as it juggles these repossessions while trying to maintain the friendly, reliable mask it's worn for years. It's a balancing act that seems harder and harder to maintain as these challenges escalate. But the financial ramifications don't stop there. The long-term effects of repossessions delve into Carmax's reputation too. The image that Carmax has crafted over the years, one of convenience and reliability for used car purchasing, is slowly eroding. This damage comes from a growing perception that Carmax might exploit vulnerable consumers. The narratives of repossessions are circulating across various media outlets and social channels, adding fuel to the fire. As consumer trust begins to wane, potential customers could very well hesitate when deciding whether or not to engage with Carmax. Let's face it, if you are a consumer contemplating a significant financial commitment like a car purchase, you want to feel secure in your choices. If the general sentiment starts leaning toward the idea that Carmax is prioritizing profit over responsible lending practices, that could deter individuals and families from coming through the doors. In a competitive market, this perception is as potent as it is damaging. The bigger picture. For a moment, let's step back and consider what this means in a broader context. The repossession crisis isn't happening in a vacuum. It reflects broader economic struggles faced by lower and middle-income consumers who are often trapped in cycles of high-interest debt. Those who can least afford a financial misstep are feeling the most strain as costs of living continue to rise, inflation surges, and the interest rates of necessary expenses climb ever higher. Moreover, the emotional repercussions extend well beyond the individual stories we're highlighting here. These experiences have ripple effects on our communities. When people face repossession, it doesn't just affect their financial health, it permeates their relationships and self-esteem as well. Picture a parent trying to explain to their child why their family car was taken back by the dealer. Those emotional scars can last. Additionally, Carmax has to grapple with the legal and regulatory implications that could arise from these lending practices. If a significant trend emerges indicating that the company's financing tactics are leading to predatory outcomes, it is not just reputational risk they have to manage. It could attract scrutiny from regulators as well. Increased regulation could complicate their approach, forcing them to rethink how they structure these loans and the interest rates they charge. Carmax's response. The repercussions of a sharp rise in vehicle repossessions have set off alarm bells, prompting Carmax to take some strategic steps aimed at mitigating risks and, crucially, trying to win back the trust of its customers. One of the more immediate adjustments, the company has tightened its lending standards, creating a taller hurdle for high-risk borrowers who are looking to secure financing for their vehicles. On the surface, this appears to be a sensible move. By making it more challenging for those with shaky financial histories to obtain loans, Carmax is aiming to reduce the chances of defaults and the subsequent wave of repossessions that often follow. However, this leads to a critical question. Are these measures truly getting to the root of the problem, or are they merely band-aid solutions that ignore deeper issues? While tightening lending standards may provide a respite, they could easily be seen as a temporary fix that fails to address the underlying challenges that these borrowers face. When you consider the broader picture of consumer behavior and the economic conditions influencing buying decisions, a knee-jerk tightening could leave even more potential customers on the sidelines, wondering if Carmax is truly the right fit for them. But that's not all. Carmax has also started to make tweaks to its pricing strategies as a way to remain competitive in what is becoming a cooling used car market. The recent price adjustments, though slight, aim to attract a broader pool of customers while simultaneously reducing the inventory levels that contribute to lot rot. We all know that when vehicles sit unsold for too long, they begin to lose value, and delaying sales can create a snowball effect that harms the company more than it helps. Yet, amidst these pivots, critics are quick to assert that these changes might not be enough to combat the more profound issues tied to persistent high-interest loans and vehicle overpricing. The price of convenience. Now, let's unpack the concept of convenience, because Carmax does a fantastic job of marketing itself as the go-to option for hassle-free car buying. When you think of Carmax, you probably picture a straightforward purchasing process that frees you from the grueling negotiations often associated with traditional dealerships. Sounds appealing, right? But before you get swept away by the charm of that no-haggle approach, let's take a closer look at the hidden costs that could be lurking beneath the surface, challenging that appeal appealing notion of convenience. The reality is that those inflated prices for vehicles at CarMax can result in consumers paying significantly more than they would elsewhere, be it at other dealerships or through private sales. So why is that the case? When you factor in high financing fees, the total cost of ownership can quickly morph into something burdensome for many buyers, leading you to wonder if that convenience ultimately comes at a steeper price than expected. Picture this: you're hunting for your next car, excited to make a purchase. But when you compare CarMax prices with those at your local dealerships, the discrepancies can be jaw-dropping. We're talking thousands of dollars for similar vehicles. In many instances, you might find far better deals through private sellers or smaller dealerships that not only offer more competitive pricing, but also provide flexible financing options that fit your budget better. This leads us to an important takeaway. Encouraging potential buyers to explore alternatives could empower them to make far more informed decisions when it comes to purchasing a vehicle. If you consider options beyond CarMax's established model, like negotiating directly with private sellers or even seeking out local dealerships, you can uncover savings that you likely didn't think were possible. Plus, these avenues also minimize your chances of getting caught up in the cycle of high-interest loans and inflated prices that have become all too common with larger retailers. And let's be real here. While the sleek branding and promises of a hassle-free experience from places like CarMax are enticing, you owe it to yourself to shop smart. Why not do a little research before you commit? You could discover a hidden gem that aligns perfectly with what you need and want without breaking the bank in the process. Navigating the complexities. With CarMax attempting to navigate the intricacies of a changing market and the repossession crisis, the company is clearly under significant pressure to recalibrate its approach. It's a tricky balancing act, and the core challenge lies in acknowledging that they must tackle the underlying issues affecting buyers. It isn't just about tweaking lending standards or making a few price adjustments. CarMax needs to engage in a more profound transformation that tackles consumer concerns head-on. These changes must also resonate with those who may be wary of financing their vehicles, knowing the stakes are higher than ever. Furthermore, the notion of convenience cannot merely be a facade for inflated vehicle prices and high-interest loans. The sustainability of any business model hinges on genuine consumer trust, which can be easily shattered by questionable practices. Thus, CarMax's ongoing journey will involve re-establishing a commitment to ethical lending, ensuring that potential borrowers fully understand their financing options, and fostering transparency in every transaction. Only then can the company begin to repair its reputation and restore confidence among consumers who desire a fairer, more accessible path to vehicle ownership. CarMax's future trajectory could significantly benefit from adopting a more customer-centric approach. By leading with sincerity and placing a focus on responsible lending, they stand a chance to not only rebuild their brand, but also promote a healthier marketplace overall. Empowering consumers to make informed choices with clarity and honesty will ultimately contribute to a more robust environment for everyone involved. As we dive deeper into these challenges and opportunities, it's evident that the stakes are high, not just for CarMax, but for the automotive industry as a whole. The dialogue must continue, shining a light on these pressing issues and holding companies accountable, encouraging innovation, and driving necessary change. After all, in the rapidly evolving landscape of car buying, it's essential for both sellers and buyers to stay informed, engaged, and ready to adapt. This isn't just speculation, it's a reality that many are grappling with today. So let's turn the spotlight to you. What do you really think about CarMax and its unique approach to used car sales? Have you encountered your own experiences? Share your thoughts in the comment below.